It's the first of the month. Rent is due in 18 days, and there's $1,510 sitting in an account, which is exactly the national median rent for a one-bedroom right now. Except instead of sitting in a checking account like a normal human being would do, that $1,510 is currently being traded by an AI bot that I gave permission to do whatever it wants. I am watching a loading screen decide my housing situation. So here's my question for you directly. If someone told you an AI could grow your money on autopilot and all the TikToks said it worked and all the Discord servers said it worked, do you actually know why it almost certainly won't work for you specifically? By the end of this video, you're going to find out 3 things. The real reason AI trading bots seem to work in the screenshots but bleed money in real life, the hidden business model behind every free trading app that nobody reads the terms on, and the one thing that separates the 1% of retail traders who actually make money from the 72% who lose it. And I promise number 3 is going to reframe every financial content creator you've ever watched. Here is the landscape you're actually operating in. The US average rent is $1,843 a month in 2026. And for a lot of you watching this, that's not a statistic. That's your entire paycheck minus groceries. You are one bad month away from a genuinely serious situation. And in that context, the idea that an AI can passively grow your money while you sleep is not a luxury fantasy. It feels like a survival strategy. I understand it. You understood it too when you set the bot up. The problem is not that you wanted more money. The problem is what actually happens when retail investors hand their money to automated systems and what the platforms have quietly decided about whose money matters more. You saw 3 Instagram reels of people my age with green portfolio numbers, a MacBook in a coffee shop, and a caption that said passive income hits different. You did not see the 17 follow-up videos where those same people explained what happened in month 2. Here's the problem that nobody explains in the promotional material. Every AI trading bot you've ever seen advertised, every one, comes with a backtest. A backtest is where the algorithm is run against historical price data to show how it would have performed. And they all look incredible. Double-digit returns, smooth upward curves, big green numbers. Here's what a backtest actually is. It's the algorithm being shown data it already knows the answer to. It's like handing someone a history exam with the answer key and then telling investors, look how smart this system is. Of course it performs well on data it was trained on. The market tomorrow is not historical data. The market tomorrow is new. According to VT Market's 2025 analysis, between 89 and 95% of all retail traders lose capital, and automation removes emotional mistakes but cannot fix bad strategy. The algorithm trades faster than you. It doesn't fix what the algorithm is trading toward. The bot I used made 47 trades in 30 days. I made 0 decisions. I felt incredibly passive and incredibly responsible. The portfolio was down 22%. I had contributed nothing except the money and the optimism. The fix? If you're going to use any automated tool, demand a live trading track record, not a backtest. Minimum 12 months of real money, real trades, real returns. If the platform won't show you that, that's your answer. This one is the one that should make you put the phone down for a second. You know how Robinhood doesn't charge commissions. You've always known that. It's the whole thing. Free trades, clean app, confetti when you buy. Here's what's actually happening on the back end. Payments for order flow, the practice where brokers sell your trades to market makers, reached approximately $953 million in Q2 2025 alone. Robinhood routes your orders to firms like Citadel Securities, which pays Robinhood for the privilege of being on the other side of your trade. Let that land for a second. The firm on the other side of your trade, the one buying when you're selling when you're buying, is paying your brokerage for access to you. They are not doing that because they expect to lose money. Wait, it actually gets worse. According to a 2025 longitudinal analysis by PipWorld covering 8 million traders and 295 million trades across 27 years, between 74 and 89% of all retail traders lose money in every single measured period. The failure rate has not changed despite improvements in technology, education, or platform design. The platform has 26.8 million users. The platform makes money when those users trade. The platform has a confetti animation that fires when you make your first trade. That confetti is not for you. That confetti is for the platform. The fix? Understand payment for order flow before you trade on any commission-free app. It doesn't mean don't use it, it means know what the actual cost structure is. Your free trade is free to you in commission. It is not free in terms of who's on the other side and why. Okay, here's the uncomfortable one. According to FINRA data, only 1 to 4% of day traders make money over the long term, while 72% lose money overall. But here's what nobody in financial content tells you. The people in that 1 to 4% are not smarter than you. They are not using better bots than you. They have one thing you don't have, and it's not capital and it's not connections. It's a written, rule-based system with a defined exit, every time, before the trade opens. AI-driven quant hedge funds, the ones actually beating the market, spent hundreds of millions on proprietary data and PhDs in physics and mathematics. Ningbo's High Flyer, an AI quant fund, returned 52.55% in 2025. That is a fund with institutional infrastructure, exclusive data pipelines, and people whose entire job is to feed the model better information than everyone else has. You have a Robinhood account and a bot you found on Reddit. Those are not the same product. I read 4 Reddit threads, watched 2 YouTube videos, and then gave an algorithm control of my rent. My due diligence was approximately the same as choosing a Netflix movie. The stakes were significantly higher. The actual solution, if you want to use any form of algorithmic or automated investing, the only version that has a real track record for regular people is index fund investing through dollar cost averaging. Set an amount, automate it monthly into a low-cost index fund, don't touch it. That's boring. It also genuinely works across every 10-year period in modern US market history. Okay, I need to know. Drop a comment right now. Had you heard about the payment for order flow thing before this video? Like, did you know that your free trade wasn't actually free in that way? I'm genuinely asking because I didn't find out until I was already 3 months in, and I want to know how many of us were just out here not knowing. Here's the thing that people screenshot and send to their group chat. There's a rule, it's called the Pattern Day Trader Rule, that has required any retail trader making 4 day trades in 5 business days to keep a minimum of $25,000 in their account. For years, this quietly kept most regular people out of the most dangerous trading patterns simply because they didn't have $25,000 lying around. In April 2026, the SEC approved FINRA's new intraday margin standards, eliminating the $25,000 pattern day trader minimum equity requirement. That wall is gone. More people with less money now have access to the most aggressive trading strategies available, and the platforms that make money every time you trade are very happy about this. Whether you should be happy about it depends entirely on whether you have a written, rule-based system before you make a single move. So, day 30, the experiment ended. The AI made 47 trades. It had no idea rent was due. It had no idea I was watching. It had no concept of consequence. It just executed a strategy on data it didn't fully understand in a market designed to extract value from people who are learning. The rent got paid, barely, not because the bot worked, because I pulled out before it got worse, which honestly is a decision the bot couldn't have made for me. Here's the thing though, the system isn't broken because you used a bot. The system is designed to take money from people who don't understand it and give it to institutions that do. That's not cynical, that's the business model, verified in public filings right now. The most dangerous financial move you can make isn't investing in something risky, it's investing in something you don't understand because the app made it easy. Don't let the confetti decide your rent. Okay, for real, tell me in the comments, have you ever used an AI trading tool, a bot, or an automated strategy with real money? What happened? No shame, I literally just told you what I did with my rent. This is a safe space built on mutual financial trauma, and if you want more videos like this, subscribe. I'll keep doing the dumb experiments so you don't have to.